Yeah, there's obviously a lot for the Reserve Bank to consider before its next board meeting in May. Obviously, there's the CPI, quarterly CPI comes out at the end of this month. But how do you think the RBA are going to interpret today's figures? Are we looking like rates could be cut next month by the Reserve Bank?
Yeah, look, I think they'll cut rates next month. I think they possibly could have cut them this month as well, if because the trade war was always going to happen. I think they're being quite cautious because inflation stayed a lot higher than they thought for longer. But the track for inflation now is pretty clear for Australia. We're not putting on these tariffs as the US and China are, and the risk for downside global growth and for higher unemployment in Australia, I think, is building quite clearly. So it makes sense, given policy is a bit restrictive, to make it less restrictive. So I think almost certainly they will cut rates in May. The only question is, do they cut 25 or 50? That will depend on the data that comes out, and also the extra information you get about the what's going on with tariff policy, because as we know, it's sort of flip-flop. So no one's very sure where tariffs will end up in 1 month or 2 months or 6 months, and that's when monetary policy is having its impact. It's not a 1 month effect, it's 6 to 12 months.
Yeah, the RBA board meeting this month was held literally just a couple of days before President Trump announced all those new reciprocal tariffs, which obviously cause serious implications for our stock market, not well here and obviously all around the world. But what's the big risk here? Is the risk America falls into recession, or is a bigger risk China potentially has much slower economic growth than expected?
Well, I think they're both big risks. It's never a good thing when the US economy is weak or has a recession. So that, because it's such a big part of the world, a slower or recessing US economy spills over to other economies. And if at the same time China's weak, then that has effects to us. So the US effects often come through stock markets first, and also a lot of international corporations have subsidiaries here, so that can be translated through the labour market. And then, of course, China is a massive exporter to the whole world, but also normally to the US, so that can have spillover effects for us as well. So both are negative.
Yeah, more broadly then, looking at Australia and the business sector here, how much pressure is it under? Are we still seeing lots of insolvencies, for example, with the small, medium business sector?
Yeah, we have. And what I would say is they rose steadily through 2024. So insolvencies, if you looked at just the number, it was a record high number of insolvencies. But if you scale it by the number of businesses, it was definitely higher than it was pre-COVID. But it wasn't back to the sort of high rates we saw back in the 2000s before the mining boom. So it's high. What we saw at the end of the year and early this year is that the number of insolvencies has basically stabilised, still at elevated levels. There's still pressure, particularly on construction firms and businesses in the hospitality area. But all of that also predates the escalation in tariff wars. So we'd expect that there'll be uncertainty coming out of that. If businesses do cut back on hiring or investment or just delay decisions, that can lead to insolvencies perhaps pushing up, and certainly if we saw global growth slowing as well.
Ivan Colhoun, Chief Economist at CreditorWatch, thanks for coming on the show.
Thanks, Ed.